As the portfolio manager of the Platinum International Technology Fund, can you tell us a little bit about the history of Platinum, your background and the investment team?
Platinum was established in 1994 and I joined in 1998. Before Platinum I was working in Europe as an analyst. Most of my career I spent in analyzing companies and investment management. And I joined Platinum first in the European team, looking at European companies. And then around 2002 I started looking more at American companies, US companies, and working on technology, telecommunication globally. So I now, I'm in charge of the Platinum Technology Fund, and I work in a team of 3 people with 3 other analysts. And yes, we cover a broad spectrum of stocks, of companies, mostly US, Europe, and Asia, I would say. And we are specialized in a variety of industries, from semiconductors, telecommunication, hardware, software, and internet stocks.
How do you manage a technology portfolio from Australia?
So we are based in Sydney, and the team is in one office. We don't have overseas offices, so it's relatively easy to communicate with companies overseas these days, with the internet, with communications being very easy. We also travel. We visit them regularly. We go to Europe, to the US, to Asia 2 or 3 times a year. And it can be an advantage to be removed from the day-to-day action, sometimes because you don't have the noise of daily variations in the stock market. So it's not as difficult as it seems to be managing from Sydney.
What are the investment objectives of the fund?
So the fund is targeting long-term capital growth, and we are investing in higher growth industries. And more specifically, we look at industries like semiconductor, software, hardware, internet, or content, which can, in the long term, deliver higher growth rates compared to the average economic growth.
Can you talk through the investment philosophy behind the investment strategy?
Okay, the Platinum International Technology Fund is built by selecting stocks one by one. So we are not benchmarked to an index, and we are index unaware. We individually select stocks according to their own merits. We believe that there are times when there are differences between prices and values for individual stocks. There are great companies which may go through temporary negative phases, and the stock prices, in this case, can be negatively impacted. It is our aim to identify if this discrepancy, if this gap between price and value is justified or not. If we decide that these changes are only temporary and we are happy with the long-term perspective of the companies, we do our own analysis and we find an opportunity to invest in these names, and that's how we select the stocks, generally on the long side of the portfolio.
You manage a concentrated portfolio of around 40 to 100 companies. Can you talk through the stock selection process for the portfolio?
To select stocks for the portfolio, we look at quantitative and qualitative parameters. For example, we look at the quality of the management, we look at the competitive position of the company in their own universe, and also we look at traditional fundamental valuation parameters. We look also at the ownership structure of the company. We look at the ability to generate future growth with the profit and the cash flow. We also look at the themes developing in the investment community, for example. We look at new technology themes evolving, and we discuss this inside the technology team, and also with our colleagues from, say, the Asian team, the Japanese team, so that we can share information and actually profit from opportunities across the world in different geographic areas.
Technology and innovation is at the forefront of global trends at the moment. We literally see new tech companies pop up overnight, many without revenue. How do you eliminate this risk from the portfolio?
We invest in listed companies, and we avoid names with no revenues or with uncertain perspective. So we tend to identify the industry where these companies operate and see their competitive position, the level of competition in the industries, the soundness of the business model, the ability to reach revenues and cash flow and cash flow generation within a reasonable period of time.
Your strategy focuses on absolute returns. Can you talk through your typical invested position and how and when that changes?
Well, we keep cash, high positions in cash when we cannot identify enough undervalued stocks. And we can also short sell indices or stocks if we want to reduce our net market exposure, or if we have identified extreme situations of overvalued stocks.
Your strategy can have a broad allocation across the globe. How do you manage currency within the portfolio?
The fund's exposure to currencies is a function of a process of stock selection in the different geographic areas. Then I can decide individually to leave currency hedge or unhedge, consistently with the discussion that we have inside the whole Platinum team with reference to the general macroeconomic conditions and directions.
What sort of investor does the fund suit, and what's the recommended time frame for investment?
We recommend a minimum of 5 years or more of investment time frame. And given the nature of technology investment, there could be some volatility or fluctuations in the performance in the short term. So it suits a growth-oriented investor.